All right, now we're back here with Caleb Preston, my great friend, giving just amazing wisdom about real estate notes, seller financing, private lending, just dropping the gems of the high level information. And I appreciate you, man. So now we're going to talk about an even another, tactic that's used by informed people, that is self-directed IRAs. A lot of people don't understand what an IRA is. They don't have an IRA. They've never even been introduced to an IRA. But this is a tool that can be used in not only your personal life to make sure you prepare for retirement, but comes with benefits for real estate investing. So if you could kind of just explain what a self-directed IRA is, if you can explain what the benefits are of it, and then can you tell me how people use them in real estate?
You bet. And I apologize if this is a repeat on some of the earlier content, but I want to unpack what is IRA. So it's an individual retirement account. And there's typically two types. There's a Roth IRA, which means you put money into it and that money can grow. And the earnings on what you put in is tax free. So it's super cool as a long-term wealth creator because you don't have that tax drag of taxes eroding that ability to compound interest over time. And you can typically contribute, I don't know, 6, 7 grand a year. It depends on the tax laws. And you can start young. I started when I was 12. So that's a great thing for you, your kids. Start putting money in a Roth IRA, and it's also liability protected. It's hard for creditors to get at it with a lawsuit. So that's a good thing. Traditional is a little different. Traditional means whatever you put in there, it actually lowers your taxable income. So if you're making a bunch of money, you can start putting money in a traditional IRA, and that actually lessens how much you owe the tax man, but that money's still in there that you can deploy and invest and then pull it out with tax advantages in the future. So tax advantages is your big benefit of an IRA, and then the liability protection is another benefit. And for a Roth IRA, you can actually have somebody inherit it and not have tax consequences, and they basically get an annuity for life. Tax law is always changing. I'm not a CPA. That could be different when you hear this video, but there's some cool tax benefits to IRAs.
So you said Roth and traditional. Now, where does self-directed come in?
So self-directed is how you can actually invest the money. So you could set up an IRA at your local bank or some big Wall Street firm, and they're going to pick and choose what you can invest in. Typically going to be stocks, bonds, traditional securities, but you can invest with companies. I'm sorry, not invest. You can set up a IRA with companies like Equity Trust Company, Pensco, Entrust, like American IRA. There's a bunch of companies out there that are self-directed, which basically means you're in control of how that money is invested, often in alternative investments. And real estate, it's kind of funny, it's an alternative investment, but you can invest in a whole bunch of things, businesses, real estate, even cryptocurrency, you name it. You can do a bunch of stuff with the self-directed IRA. There's a little bit different standard. You have to really make sure you're not self-dealing or you're not going awry of the self-directed IRA lending or the rules, to make sure you're not like paying yourself a bunch of cash and trying to get tax breaks. That's not going to fly. But what's cool is you can buy notes, you can lend money, you can buy properties, you can fix and flip, you can do it all within your IRA when it's self-directed.
Thank you so much. I mean, that is just something that people just don't know. You know what I mean? Like, so what's a good way to kind of use it in maybe no buying or real estate?
Yeah, so how I've done it is I've used, I started my Roth when I was younger, so individual Roth IRA, and then for my business, I have what's called a solo Roth 401k, and basically it's my own retirement account, for my own LLC, my own business that I own, and I can put money in there every year on the Roth side as well as the traditional side, and so basically I've been able to kind of put money in there that I use to buy notes. So in this case, I will buy, I haven't had a huge amount of money, but I'll buy like a portion of a note along with another investor, or I'll buy little notes where I basically will buy, either I'll lend money or I'll buy an existing seller finance note for cash at a discount. And then those checks go right back to my retirement account. So every month it's just mailbox money. As long as you buy the notes right, you leverage the knowledge we've learned thus far of what makes a good deal. I haven't had any foreclosed, and all of them have paid me back thus far because I've been able to have the deal flow and I've known how to do it right. So, I mean, that's not
actually a clarifying question. Like you said, if I invest out of my IRA, when I make the profit, I need to put it back in my IRA. Is that what you're saying?
Exactly. So the money has to stay in that bucket. You can't lend down from your retirement account to the deal and have that money come back to you. You got to keep it sacred in that retirement account. But honestly, you want to, because then you're leveraging all the tax growth and benefits. Not only is it legal, it's also smart to keep the money in there. And one little secret, if you have a 401k, you actually can borrow against it. So, and there's no tax consequences if you pay that money back. So what you do is if you can build that money up, you can actually borrow against it and use that money however you want out here, outside your retirement account, and then pay it back. So there's some cool strategies that open up when you have a retirement account.
And like you said, again, we're not lawyers, we're not CPAs, but we've been doing some things for a while. So do your additional research on everything in this whole website. But we're giving you some good information that you can go research, verify, and then start to take action with. So Caleb, thank you so much for breaking that down.
You bet. Thank you.